Q4 2023 earnings were just announced and the earnings call just ended. We have all of your breaking news that you need to know from this earnings call, and we're going to put this into perspective. Was today good or bad for Tesla stock? And what do I think is coming next based on the new information that we just learned? All of that and much more here in this video, including data coming out tomorrow. Important data, not just small data like GDP level data that will be very influential to stocks and to Tesla more specifically. But let's start with the earnings call and everything that was announced, or really lack of. See, Tesla reported their earnings today, and the numbers came in broadly in line with expectations. Free cash flow, operating margins came in better than expected, especially auto gross margins came in about 1% higher than Wall Street was expecting. So that was very positive. But we did have a negative because we did not get guidance for deliveries next year, like none at all. We also did not get guidance on auto gross margins and what they will be for 2024. Elon says it's very difficult to predict where auto gross margins will be in 2024. He said, quote, "We don't know." He stopped the CFO from speaking and said, "We don't know." He just interrupted him with that. So the markets definitely don't like that. That could mean more price cuts in 2024. Now, Tesla and Elon did very much go over the fact many times in the earnings call, actually, that they are focused on reducing costs, that this is a pennies game. If they can get costs down even pennies, then that does free up some room for margins to improve, which I think means for Tesla, for them to lower prices. In regards to auto gross margins, Elon also made it clear a lot of it's about rates. If rates come down quickly, he says they will be good. If rates do not, they will probably not be so good. And that was literally word for word what he said. Elon and the other officials on the earnings call were asked about the 50% compound growth rate that Tesla set out in 2020. Now, they were pretty clear on this as well, that we're not going to be there in 2024. Potentially in 2025. They made it clear that the Model 3 and the Model Y, the big years of big growth, are over, and it's really going to come down to the next gen platform, and that's going to drive 50% compound annual growth rates. So we're kind of in a lull as far as Tesla's growth rates. Elon and the Tesla team did provide a little bit of clarity on the Cybertruck. They were asked how many of them are sold, basically what's the conversion ratio. They did not provide a specific number, but they say so far the conversion ratio has been better than they expect. I would imagine 50-60% conversion rate, and you can kind of infer how many orders they have. Now, they did say they are trying to reduce the wait time and that the Cybertruck is not demand constrained, but it is production constrained. Elon also made it clear that they could raise prices on the Cybertruck if they wanted to or if they needed to, but they simply don't want to gouge people that want to buy one. It was interesting that people are stretching, quote, their wallets to buy a Tesla compared to other vehicles, so it is surprising or quite, I guess, eye-opening, if you will, that the Model Y is the best-selling vehicle in the world. Elon and the Tesla team were asked about the total addressable market, where that is right now. And they basically referred to, well, there's 100 million cars that are sold every year. About 9% of those are EVs currently, and there's a long way of growth from there, even without the next generation platform. But they made it very clear over and over again, the next leg of growth is from the next generation platform. One of the individuals on the call was kind of joking and said, well, if we're 2% of the market today, there's 98% more to go. And the stock did see a little bit of a pop on that, but I think that was interpreted more as a joke than anything else. Elon did also speculate that we would see deliveries of the next gen vehicle coming in the second half or by the end of 2025. Elon did say Tesla is probably going to produce around 250,000 Cybertrucks a year as a longer term target, but that number could be higher. And for a little bit of context here, the Chevy Silverado produces like 700,000 trucks a year. So that's not quite, that wouldn't be the best selling truck, but it wouldn't be a low selling truck as well, right? That would be kind of a mid tier, not a super low production, not a super high production as well, which was probably in line with what a lot of people were expecting after all. Elon and the Tesla team also touched on advertising. They were asked by an analyst, I believe, I forgot to write it down, but how effective advertising has been so far. And advertising is interesting because I've said it before and I'll say it again. McDonald's does not advertise so you go out and buy yourself a Big Mac or chicken nuggets or your kids a Happy Meal. They advertise so they keep their brand alive inside your brain. So when you are hungry the next time, you think about McDonald's as an option. There's two different sides of advertising, at least for Tesla. There's long-term advertising, trying to, put that picture of a Tesla in someone's mind when they're looking to buy a new car. There's also the factor of trying to educate people. And they made it very clear on the earnings call that they want to educate people, but at a reasonable price, and that they're still trying to find out the best way to do this and the best way to advertise. Now, they did provide us a little bit of details, which were pretty encouraging on the front of advertising. They said they ran a very specific targeted ad campaign in Texas, specifically in Texas, that had 10 million unique impressions, and that led to 2.5 million visits to the Tesla website, which most of them, we didn't get an exact percentage, but most of those visits were first timers. So it does seem like it's at least semi-effective. 25% conversion ratio to get someone to click on your ad is very high. If that's the real number, then I think we likely continue to see more advertisements. Elon went on to talk about the next generation manufacturing for a while, that the manufacturing capability is going to be like nothing else anyone in the world possesses, especially with automakers. He did talk about the 25% voting power situation. He did not say definitively what he would do if he did not get 25% voting power. It sounded more so like once that court proceeding's done in Delaware, it's going to happen. It's just a kind of matter of time kind of thing. But he did basically just say the same thing, that he wants to be an influential, quote, steward with AI and Tesla, and he doesn't want some rogue entity that just accumulates shares like a BlackRock or something overpowering him and kicking him off the board or not letting him be the CEO anymore. Kind of what we already know, but he did provide a little bit of clarity, at least for maybe some of the investors that did not already know that. Pretty interesting as well, Elon and the Tesla team mentioned Dojo in a way that they have not done so before. So they were basically asked by an institutional investor, do they have enough H100 NVIDIA GPUs? And they basically said Dojo and NVIDIA GPUs are working together, but that Dojo is more like a gamble than a certainty. It's a, quote, high risk, high payoff investment. So they're using Dojo to run certain tasks right now, but it's very uncertain whether or not Dojo will make the final cut, if you will, and ultimately be influential to training FSD, which was something we have not heard before, but I don't think that is having too much of an effect on Tesla stock here in after hours. Elon and the Tesla team did get asked about the $36,000 COGS, cost of goods sold. That is the dollar amount it costs Tesla to make a Tesla, and that sits at about $36,000 right now. Tesla's been reducing their manufacturing costs, their cost to make a Tesla by about 10% a year. They were asked if that can continue, and the management team at Tesla basically said yes, but not forever, that it will eventually slow down, which is something that we obviously already knew. But again, they did say there is more opportunity for cost reductions, and that that's something that they work on every single day. Another very interesting topic that was touched on is China autos coming to the US, and what kind of danger that could possess for Tesla. And Elon said, which I mean, hats off to him, literally, because he said most auto companies would go bankrupt if China EVs were allowed in the US and other countries without very high tariffs and other, fees associated with them. He wasn't necessarily concerned that Tesla would have a problem, but he seemed pretty optimistic that's not going to be a problem, just because, I mean, you're going to sacrifice a lot of GM, Ford, Stellantis jobs if that actually were to happen. Elon was also asked if they plan to partner or would be open to partnering with a Chinese OEM or Chinese EV maker if the opportunity arose. And he said yes, they would be more than, willing to kind of partner with a Chinese auto company for the right reason, but that there's really no reason to partner with anyone as of right now. Elon did say he was happy to license FSD or supercharger technology to any company that wants it. So this is something he talked about like 2 earnings calls ago, that he was in major talks or advanced talks to potentially license FSD to a major OEM. And he said a lot of OEMs, he gets the sense that they don't even believe FSD or autonomous driving is here or that it will be here. That he said, quote, "If I were a CEO, I would be calling Tesla right now to be licensing FSD." He said there are some preliminary discussions with some companies, but nothing definitive. There was also a lot of talk about Optimus on today's earnings call, actually more than I thought there was going to be. And Elon said Optimus could, if it, goes correctly, be the most impactful, the best product, the highest selling product that the world has ever seen if things do go correctly. Now, Elon was also asked if Optimus would, when they would start actually selling Optimus to companies or to people, and he said there could be small shipments going out by the end of 2024, which I do think was a lot sooner than a lot of people thought. And if you look at the chart, that is roughly when we got this bounce in Tesla stock in after hours, around here in that area. But a lot of very positive talk about Optimus, and well, better than expected things were said. Elon and the Tesla team were asked about Giga Mexico and Giga Nevada, and they did say that Nevada, they have already broken ground, and on Giga Mexico, they have already started construction, but it is just kind of laying the groundwork type construction right now, that they don't actually want to start, going all in on Giga Mexico until things improve, they get a better understanding of how they're going to manufacture the next gen vehicle. And really, I put in my notes that that's not coming anytime soon. Adam Jonas with Morgan Stanley, he asked, can we expect a Tesla AI day in 2024? And Elon said, we need an update, or investors should get an update, but it's hard for them to do so because competitors literally watch Tesla's AI day and copy them. Same was true with Battery Day and the last AI day that took place in 2022. So they want to be a little bit careful not to, give out the secret sauce, as Elon said. Well, that makes a lot of sense. But he said we will probably get some form of AI day at some point in 2024. Elon and the Tesla team were also asked how taxes were going to be in the year ahead, because Tesla pays around 10% taxes, all things considered, and the average company in the S&P pays like 25%. At least those were the numbers that were thrown out on the earnings call. Not exactly sure if those are 100% factual, but the Tesla team said that's basically not going to change in 2024. So what is my synopsis on all of this? What do I think about the earnings call, the numbers, and what is likely coming next for Tesla stock? As you can see, Tesla stock is down about 6% here in after hours, which is actually surprisingly good, just considering I would have expected a larger knee-jerk reaction if Tesla did not give, guidance on deliveries. Like, Tesla gave us 0 guidance on deliveries. Good news is we get a lot of internal short-term data, daily insurance registration numbers, or even just selling reported numbers out of many countries in Europe. We get weekly insurance registrations out of China, and most other countries have some way of giving us Tesla data, Tesla sales data. So it's going to be pretty easy to kind of keep track of where things are at. But them not giving out guidance is the thing that really sent Tesla stock lower. Now, auto gross margins. Everyone thought that was going to be the big thing that would move Tesla stock. Indeed, it was not. Auto gross margins came in 1% better than expected. And for the first time in 5 quarters, auto gross margins have just improved. And we actually may have seen the bottom last quarter, but that did not outweigh the lack of guidance that we did not get from Tesla. Now, Tesla said to expect noticeably slower growth in 2024 than 2023. Tesla delivered 33% growth in 2023. So Wall Street was expecting 21% delivery growth or so. 33% to 21%. You're probably in line with the estimates that Wall Street has, but Tesla did not confirm that. And again, Tesla did not give guidance for margins as well. Besides, if rates go lower, well, margins are going to be good. If rates go higher, margins are not going to be good. Those are the two things, and the only two things that are really affecting Tesla. But again, the good news is we can track where deliveries are pretty easily. So we'll know if there's a problem happening for Tesla, if that does happen down the line, a demand problem, if you will. And for margins, we know what margins are now. Tesla just cut prices a little bit. We're just gonna watch to see how pricing evolves, and presumably margins should follow suit. Estimates will go higher or lower, but I think it's more of an algorithmic thing that's happening right now here in after hours. The fact that you did not get that, maybe algos are selling off Tesla stock, and some capitulation is definitely taking place with some retail investors. Overall, I think Elon was being pretty conservative with a $25,000 vehicle, saying that that would probably come by late next year. We didn't get an early 2025 announcement. We didn't get a 2024 end of the year announcement. They are really trying to be very conservative right now. So I don't think anything on the earnings call really had that much of an impact on Tesla stock. So when I boil this down, it's pretty easy to see that, okay, we didn't get guidance. We can follow that guidance. I don't think this is going to cause a larger, kind of longer term sell-off, considering we have already sold off so much. Now we're at $195.65 per share. It wouldn't surprise me if Tesla stock can actually find a bottom here and start to recover until we get another price cut, until we get something else bad or good. I think the stock could probably recover from here, but definitely not the 15 or 20% update that I thought we could have seen, even if Tesla would have given us 2.1 million deliveries or 2.2 million deliveries for a guidance. I think Tesla stock would be up over 5% right now, but that just did not happen. We do have some data coming out tomorrow morning. We have durable goods orders month over month for December. In November, you had 5.4%. Positive, so that's a really strong number that we've seen. That did have a big impact to the 5.2% GDP number we had in last quarter, but 1.1% being the estimate, that is a very strong number still, and I would be perfectly happy with that. The markets would be perfectly happy with that. Now, GDP growth rate quarter over quarter advanced data for Q4 also comes out tomorrow morning at 8:30. Last quarter was 4.9%. This quarter, you're expecting around 2.3%. Atlanta Fed GDP Now tracker has the estimate at about 2.4%. So 2.3%, that's okay. Really, anything above 2% is probably going to be seen as good news. Anything over, 1.5% is probably going to be okay. Anything less than that would be theoretically bad news. But again, you want to watch to see what comes out in the report, because you're going to get all of this is basically going to be secondary data, a lot of it in regards to the advanced estimates for GDP. So did GDP estimates beat or miss based on inventories? Based on, what? right? Trade balance, like what caused GDP to be good or bad. That's going to be very important, and I will keep you guys updated on that on the channel for tomorrow as well, so no need to worry there. PC prices, quarter over quarter advanced data for Q4. All of this data will come out at 8:30 in the morning. Initial jobless claims, all kinds of different things. We're not going to run through all of them and all the estimates, but yeah, those two are going to be the most important for the headlines. Durable goods orders month over month, and GDP growth rate quarter over quarter advanced data for Q4. Markets are always going to fear a recession no matter what market you are in, and right now with the Fed raising rates this aggressive as they have, getting ready for price cuts, or for the Fed to start cutting rates, the GDP is definitely going to matter a little bit more than typical. You will get new home sales month over month and for the month of December in total at 10 o'clock in the morning. And then the Kansas Fed Manufacturing Index is expected to come in at -21. Last month in December, it was -4. Now, some of that could have been due to some of the cold weather. So we definitely want to see kind of what the narrative is. Is manufacturing slowing down because of weather, because of things you cannot control? Or are you seeing a demand problem starting to take hold? And that's why manufacturing is dropping so quickly. But -4 to -21 is a huge drop, and the Kansas Fed Composite Index is expected to fall from -1 to -9. Overall, like I said, just circling back to Tesla, Tesla's at $195.60 per share, down about 5.9% here and after hours. Tesla had an RSI of 27.12 heading into today. Don't be surprised if the stock can go green tomorrow. Don't be surprised. Now, would that be my base case assumption? Maybe not, but it wouldn't surprise me because the stock is so sold off. And really, earnings came in better than expected, especially on auto gross margins, the thing the markets really care about. We just didn't get any guidance. Apple does not give full year guidance, and Apple stock has been able to do very well. Now, Tesla, that's a different story. Tesla does things that Apple would never do, right? Like cutting prices all the time, price wars, there's so many different variations between Apple and Tesla. I don't really want to go down that road too much, but it doesn't have to be a super negative thing, especially with a company like Tesla, when they do not give definitive full year guidance, because we can track the progress. So I don't think that's a good reason to sell the stock off another 6%. But yeah, it looks like another red reaction to another Tesla earnings. That follows the last 3 of them being down over 9%. This time down 6%. Could set you up for a big reversal coming tomorrow throughout the rest of this week if the economic data does come in good coming tomorrow morning. If not, it's Red Dead Redemption all over again. Let me know what you think down below in the comment section. What is your opinions on the situation? Summarize it down there for me in the comment section. Was this good? Was this bad? Better than expected? Better than feared? Or just outright bad? Thank you for watching. My name is Michael Tyler. If you guys want to come trade with us live in real time, check out the link down below in the description of this video. You guys have a fantastic rest of your day, and I will see you in the next one.